Thumbs up. All right. Welcome, everybody. Thank you so much for joining me tonight for this live commercial real estate training. Tonight's going to be action-packed. We're going to cover a lot of valuable information. And thank you for taking your time, committing to this. I know that you could be doing other things this evening, but you're committed, you're here, and you're committed to learning about commercial real estate investing and how you can start building wealth for you and for your family. For those of you who don't know, my name is Alex Kaufman. I'm partner at Type Real Estate, TR3 Capital. I have a few partners, but my longest partner is Matthew Tyke, who a lot of you know. And over the last 7 years or so, Matt and I have bought a lot of real estate. We've wholesaled a lot of real estate. We have a real estate brokerage here in Texas with about 110 plus real estate agents who work with us. We do residential, commercial, but mostly is investing. And that's what we're here to talk about tonight. Matt and I have built over a $45 million real estate portfolio. We started off buying single family homes, duplexes, triplexes, quadplexes, small commercial real estate, like 8-9 unit apartment complexes, mobile home parks. We now own commercial multifamily. We own some retail shopping centers. We own RV parks. And we have over a $45 million real estate portfolio. But we built that over time. You know, this didn't come to us. We weren't given any money. We didn't have a trust fund. Matter of fact, you know, 9 years ago, I had $0. I was working at Firehouse Subs and I was broke. So we built this over time. And tonight I'm going to teach you in a couple of hours. I can't show you everything that I've learned and done over the last 7 years. But tonight I'm going to be feeding you a lot of information on how you can do this yourself. Tonight you're going to be learning. It's like I'm going to be feeding you from a fire hose. It's going to be a lot of information. So I want you to grab some pen and paper. Every time I put on these workshops, these live trainings, when we do boot camps, I've always got pen and paper here, and you should too, because you should be taking notes and writing down important information as we go through it tonight. But again, thank you again for being here. Close the door, turn the phone off, put your phone on silent. Just commit to me, to yourself, to your future for the next, sorry, we had a little audio feedback, but commit to me, to yourself, and to your future for the next couple of hours, because we're going to be covering what the opportunity is right now in commercial real estate, how you can take advantage of it, and how you can start building this for yourself. You don't have to do what I did. You know, as a matter of fact, I would recommend you do not do what I did by starting small, starting with the single family homes, the duplexes, the quadplexes. I talked to a lot of people who are looking to get started investing in real estate, and they just don't think that it's possible to go straight to the big stuff, the better stuff. Last week, it was last week, I was talking to this kid who's 20 years old. He just graduated from college. He should be here tonight. But he said that, you know, he wanted to start investing in real estate. He wanted to make real estate his career. He was reaching out to us to see if we would be willing to help him. And he said that, you know, he wanted to buy a fourplex this year, live in one unit, rent out the other 3 units. Next year, he wanted to buy another fourplex. And over the next 5 years, by the end of it, there he is, Benny. He's in the chat. And over the next 5 years, he was going to hope to own 100 units. And Benny, what did I tell you? I told Benny, I said, forget about that plan. If you really want to own a big real estate portfolio, and if you truly have the goal of eventually owning 1,000 units, forget that plan and go straight for a 32-unit apartment complex right now. And I'm going to personally help you do it. So you don't have to do what I did. You don't have to buy the single family home. You don't have to buy the duplex. You don't have to buy the fourplex. You can jump straight to the big stuff that's going to actually pay you some money. It's actually going to create some wealth for you. You're going to be able to get good and better debt on it than you would on the small stuff. You're going to be able to actually get cash flow. The income that the property will produce will actually be able to cover the expenses. It'll cover your bookkeeper, cover your CPA. It'll cover any attorney fees that you might have. The bigger deals make more sense than the smaller deals, especially in this environment right now. The smaller deals were great back in 2020 when values were, you know, increasing 40% year over year due to inflation, and interest rates were at, you know, 2%. But that's not happening anymore. The single family homes are decreasing in value. The single family homes do not cash flow. You go out and you get a mortgage today on a single family home here in Austin, for example, your mortgage alone, principal and interest is probably going to be like $3,500. Then you got to pay property taxes and insurance. And your rent, if you're to rent it out, maybe you rent it out for like $2,500. So that's not where you're going to make money. And it's the same thing for these fourplexes and the triplexes and stuff. It's not where you're going to make money. You're not going to build a lot of wealth there. And you should start to think bigger. I wish that I would have thought bigger and started bigger earlier on in my career, but I was thinking too small. But I'm here for you to tell you that you can think bigger. It is possible for you. And you don't have to start with the small stuff. So again, grab some pen and paper. Today we're going to be covering commercial real estate deals. We're going to be covering what to look for in deals, how to find these deals, how to structure these deals, and how to put them together. We're going to discuss financing, a few things, but we're only going to be here for a couple of hours. So grab pen and paper and make sure to take a lot of notes. While we're starting here, if you can, I love seeing the chat. The chat, allows me to feel like I'm not sitting here in a room by myself, talking to a camera. So if you could, please put in the chat where you are tuning in from. Are you from Austin, Texas, Dallas, Texas? Are you from Mississippi, Tennessee, Atlanta, Georgia? Where are you tuning in from? Put it in the chat. And where are you looking to buy real estate? What markets are you looking to focus on? We got Houston, Leander, Austin. We're headquartered here out of Austin, Texas. That's where I'm sitting today. We got Wisconsin, Corpus Christi, Houston. We got a lot of Texas stuff. San Antonio, Greater Houston, Dallas, wanting to buy in Sherman and Denison, Ohio, and North Carolina. I love it. Cool. So go ahead and do that. I do want to, before we get started here, I do want to tell you guys, look, this is can we go ahead and share my screen, Kat? Savannah, Georgia. Love it. All right. So look, these are the types of deals we're going to be talking about that you can buy. All right. This is an RV resort that we just closed on May 3rd. We closed on, this was a $7.1 million deal. Some of you guys here are invested in this deal actually with us. 135 slot RV resort after we developed the slots. There's like 25 remaining. We bought it with 109. This is a Class A RV resort right outside of Dallas, Texas. And this deal, for example, is a deal that you could possibly buy right now. We just went under contract on another RV park about 10 minutes from this one, right down the road on the interstate, for $9 million. That one is a 142 slot RV park. And these deals are easier than you think, okay? Just because it's got a big number on it doesn't mean that it's not possible for you to buy it. Matter of fact, I was talking to the banker on the new RV park today. And yesterday, she has lent on this RV park before. She's familiar with it. Their bank likes the deal. And so it makes sense to just stick with the local bank in this in Terrell, Texas. And by the way, this is the fastest growing county in Texas and the second fastest in the United States. But I was talking to her. I don't have a picture of that one up here yet, but we just got under contract. But I was talking to her, and she already knows the deal. She likes the deal. She knows the deal cash flows. The bank likes the deal. They like the city. They believe in the city. They know that all this new development is coming here. And these deals are easier to get loans on than you guys think, right? A big objection that I hear a lot from people when it comes to real estate in general, but specifically when it comes to buying these bigger deals is, how am I going to get a loan? I can't qualify for the loan. But this is the perfect example. I was talking to this lady and we're going through it. I'm telling her about who I am, telling her about who we are, what we do, what we own, all that type of stuff. And then we started talking about potential loan terms. And so we talked about the interest rate. We talked about, interest only. She already knows the deal. She knows it cash flows. She's not going to run my credit score for it. She's not concerned about my financials and my income because she knows that the property produces enough income to cover the expenses of the property and the debt of the property. potentially be a non-recourse loan, meaning that if I don't pay the loan on the property, I'm not personally liable for it. And it's all because of the type of property that it is, right? If this was a single family home, that wouldn't be the case. It would be recourse. I would get my credit score run. I would have to show my personal financials. I'd have to guarantee the loan. But because the deal has enough income to support the expenses and the debt, and the bank likes it, and they believe in the city, and they believe in the asset class and the asset, none of that stuff matters. It's all about the deal. So today, my hope is to shift your mindset if you're not there already. And if you are there, in terms of thinking bigger, then my hope is, and the one thing that you should be taking away from this is, number one, think bigger today. Number two, I'm going to be covering how to start approaching taking down these deals. But again, this is going to be drinking from a fire hose. We're going to cover a lot. So get pen and paper and get ready. Also, too, for any of those who are interested in taking it further, you're committed, you want to take this a little bit slower, you want access to information a little bit further, and you don't want to just attend this 2-hour webinar and go out and do it on your own, we're making a special offer for those who are ready to take it to the next level. This is really a stupid offer. It's crazy. It's almost free. What you're going to get in this offer that we're making today, it's the Get Started Now offer, okay? This is our Commercial Real Estate Investing Essentials course bundle. This is 6 courses covering how to buy commercial real estate assets. You get lifetime access to this. It's virtual learning, so you can log in and do it at your own pace anytime you want to, and you have access to it for a lifetime. We sell this course and the course bundle for over $10,000, okay, on our website if you were to go and buy it individually. But we're giving it to you today, along with a general admission ticket to our One Deal Away boot camp. This is a 3-day boot camp that I put on every single month. The next one starts on June 4th. It's 3 hours a day, and I'm going to spend 3 days with you, holding your hand, helping you locate a deal, underwrite the deal, and send an offer on a deal that will change your life, make you over $1 million, and it will set you up and start building wealth for you, okay? So that's a 3-day boot camp where I hold your hand and I do this with you over the 3-day period. It's a boot camp, so I'm going to give you the action steps. You're going to have homework. You're going to come back the next day. I'm going to personally help you analyze these deals, underwrite them, locate them, and send the offer on the deals, all right? So you get the course bundle, and you're going to get the general admission ticket to the One Deal Away boot camp that we're putting on June 4th through, I guess, June 6th, June 7th as well, if you have the VIP ticket, all for just $97 a month. You get the boot camp ticket for free, and you get the courses for only $97 a month. You can cancel at any time. But we're making that offer for you and anyone that wants to take advantage of this and take it a step further today. Just go to treuniversity.com/now. Links in the chat, and here's the QR code. All right. So first of all, why are you not investing? Well, you need to establish what the problem is first, right? If you're not currently invested in real estate assets and you're not taking that step, there's only a few reasons why you're not doing it, okay? And by the way, there's only one wrong way to invest in real estate. And it's, number one is to not invest in real estate. That's the number one way you can guarantee you're never going to make money in real estate, is you never take action. You don't take those next steps. You don't put in the work. You don't do your homework. You don't show up to these things. When you show up to these things, you don't leave here and actually put into action what you've been learning and what me or anybody else is teaching you. But you have to put in the action. And if you never invest, then you're never going to create wealth in real estate. But here's probably why you're not investing. Number one is lack of knowledge and uncertainty, okay? Real estate investing is not rocket science. This is nothing special. I'm not, the smartest guy on the planet, no matter how smart I may think I am. I didn't go to college. I barely graduated high school. For most of my life, I was going down the wrong path, doing, very non-productive things. Like I told you 9 years ago, I was working at Firehouse Subs, making $8.25 an hour. I'm not the most sophisticated person. I'm sure there's a lot of people in here who have bachelor's degrees, master's degrees. I'm sure we may even have some doctors in here. But lack of knowledge and uncertainty is first and foremost what keeps a lot of people back from investing in real estate. And today I'm going to give you some of that. And when you have the knowledge, then you have certainty. When you have the knowledge, you have the confidence. But you need the knowledge to be able to go out there and start acting with certainty. So that's number one. Number two, don't know where to find deals. All right, we hear this a lot. There's no good deals out there. I can't find any deals. But really the main thing with this is that you don't have the knowledge. Going back to number one, is you don't have the knowledge or the certainty to know when you got a deal. The deals are everywhere, okay? And we find deals and get deals sent to us all day, every day. We probably analyze 30 to 50 deals a day without even trying. They just get sent to us. And I'm going to show you how to build relationships with people and who you need to talk to in order to get these deals sent to you, to where you're not just going out there and driving for dollars. And by the way, this is also a difference. I don't touch on this a lot, but for those of you in here who are looking to make the switch from, residential deals, flipping houses, wholesaling houses, buying single family rentals, up to buying these bigger commercial deals, there's a big difference in the way that you go about finding these deals, right? If anybody is familiar, the residential route is you got to pick up the phone, you got to start cold calling, you need to drive for dollars, you're going to send out mailers. It's a lot of outbound prospecting direct to the seller, okay? While you absolutely can do that with commercial real estate deals, I'm going to show you the relationships that you need to build in order for those deals to just get sent to you. Because the deals are out there, other people have the deals that you're looking for, and they will send them to you if you have the knowledge and the certainty, and if you are a closer, and if you can, show them that you'll actually be able to get these deals done. All right, so you don't know where to find deals. Number three, you don't know how to analyze deals. Analyzing commercial real estate deals, Kat, go ahead and bring me up here to the board. Analyzing commercial real estate deals is really simple. It's a very simple formula. It's just a little bit of addition, subtraction, a little bit of multiplication, and a little bit of division. But it's super simple, right? This is not, I don't know. What's a college math course, Kat? Calculus. Yeah, it's not calculus. This is very basic elementary school math. All right. So this is the basic formulas that you're gonna use to analyze deals. All right. So don't overcomplicate it. You got your income. Your income is made up of rental income. Your income is made up of pet deposits, made up of pet rent. It's made up of application fees, made up of late fees, laundry income. For example, this RV park that we have right here. Sorry, we'll share the screen here in 1 second. But this RV park right here coming up on your screen, we make $80 a day from laundry income here. All right, every single day, the residents at this currently 109 slot RV resort, they go to our laundry room. We have 6 washers, we have 6 dryers, we got a credit card machine hooked up. They put their credit card in there. It's $2 a load per washer, per dryer. And every single day, we make $60 to $80 a day in laundry income. Do a little math. Let's see what that is here. Do a little math on what that is. 60 at the low end times 30. We're looking at $1,800 a month on the low end just from laundry income from the residents. All right. You also have late fees, right? When the residents don't pay their rent on time, you get charged late fees, right? So that also gets included. And then there's all other sorts of income. The new RV park that we're looking at, they sell propane, they sell other items, they sell other things. If you're charging back utilities, that's also going to be income. So your income is made up of the rental income plus your other income, including all those things, depending on what your property has. Then what you have is your operating expenses. Write this down. OPEX, if you don't know what it means and you've heard anybody talk about it before, OPEX stands for operating expenses. Your operating expenses are made up of your management fees, your payroll, like here at the RV park, We have staff who live there. We have staff who work there on site. We pay them every single month. So you have your payroll, you have your property management fees to the property management company. You have your property taxes, you have your insurance expense, you have maintenance and repairs. Today we had somebody out here trimming all these palms. That's an operating expense. If you have to pay for some of the utilities, that's an operating expense. All these things make up your operating expenses. What is not included in operating expenses is your debt expense. Okay. So you have your income minus your operating expenses, and that equals, write this down, your NOI. Your NOI is your net operating income. Net operating income is the difference between your income and your operating expenses. Gives you your NOI. Now, commercial real estate is valued based on the NOI. The NOI is the income that you're getting from the property. You're buying a business when you're buying commercial real estate. Not only are you buying a fixed asset, you're buying a business, and this business produces income. And this business is valued based on the income that it produces. The more income that it produces, the more valuable the asset is. And so when you're analyzing commercial real estate deals, the higher the NOI, the higher the value, right? There is value to things such as the land. There is value to things such as the improvements of the asset. But the real value when you're buying commercial real estate deals is the NOI. And it's the same thing for RV parks, same thing for multifamily deals, same thing for retail, same thing for office, same thing for industrial. You're buying the NOI, okay? Now, after your NOI on your income statement comes your debt. This is your annual debt service, all right? Your annual debt service that you're subtracting from your NOI, that you pay out of your NOI, is what you're paying the bank or the seller finance, the bank, however you're getting the loan, Fannie and Freddie. You're paying your debt service, and this comes out of your NOI. And what's left over is your cash flow. Your cash flow is what you get to put in your pocket every single month, every single quarter, every single year. This is what you keep. This is what you walk away with. And this is what you get to, start living off of, or start reinvesting back into other deals. But the cash flow is after all your expenses and after your debt, what's left over is your cash flow. Now, higher the cash flow, better the deal, right? I can tell you that you're not going to be able to cover these things with the smaller deals. You're not going to be able to cover these things with single family homes or duplexes or triplexes or quadplexes. No matter how you justify it in your head, and no matter how anybody tries to justify it to you, I'm telling you that I've done this over, hundreds of deals, and it doesn't work. It didn't even work in the, when interest rates were 2.5%. Buying in a good market, right? Like you can go buy, I'm sure, in some random city in some random part of the state, and find yourself a little 2% deal or something, a single family home. But I'll tell you, if you do cash flow $100 a year or something, or $400 a year, number one, what is that going to do for you? Nothing. You're not going to retire off $400 a year. And also, I guarantee that anybody tells you that is not factoring in their bookkeeping expense, their CPA expense upon the tax return. And also, as soon as the water heater goes out, as soon as the AC unit goes out, now you're negative $3,600. Okay. So it doesn't work. But the bigger deals, it does work. The bigger deals cover all of those expenses. The income is so great, and the operating expenses, because of the economies of scale of more units, the percentage is much lower, right? So you have more NOI, and you get better debt on these deals, and you have more cash flow. So this is it. I mean, this is the main formula, right? This is the entire formula right here. Income minus OPEX equals NOI minus your debt equals your cash flow. And if you can solve that simple equation right there, then you can underwrite deals all day long. All right, Kat, let's go back to the screen here. So you don't know how to analyze deals, but that's how you analyze them right there. And then lastly, you don't know how to close deals, okay? It's one thing to have the knowledge and the certainty. It's one thing to know how to set up deals being sent to you. It's another thing to know how to run these formulas. And this is just one of the many formulas. At the boot camp, if you take advantage of that offer, you have yourself a boot camp ticket on June 5th, on the second day of the boot camp. We're going to spend a whole day going through analyzing these deals. This is just one of the few formulas that you're going to need to know to really analyze deals. Seller finance formula, the added value formula, but it really doesn't get much more complicated than this. But once you know all those things, then you know how to get the deal closed, okay? We're going to cover this today with the team members that you need in order to get it closed. But you got to get a loan for the property. You got to have the down payment and the closing costs. If you don't have the cash to close and or the down payment for it, you're going to need to know how to go out and get that capital from partners and investors and pitch these deals to people who can invest with you so that y'all can take down these deals together. Then after you get the deal actually closed, then you got to operate it, okay? You got to have the right property manager in place. You got to ensure they're executing the business plan. They're not stealing from you. They're not, overspending your money or your investors' money. And they are executing on keeping expenses low where they need to be and raising the income to where it needs to be so that you can increase your cash flow right here. So why you aren't investing. For everybody here, put in the chat again, please. Like I said, I enjoy talking to you guys, at least through this way. And I didn't mention this earlier, but put any questions that you have in the chat. I'll try and answer these as we go along through this live training today. But also at the end, we're going to have a quick little Q&A section. I'll bring you up here. I'll answer any questions that you have or materials that we went over. So put your questions in the chat. But if you're sitting here and you're not investing in real estate yet, I'm curious, which one of these is holding you back, or which one of these do you believe is holding you back from investing in real estate? Is it number 1, number 2, number 3, or number 4? Just put it in the chat. Knowledge and uncertainty, don't know where to find the deals. Number 3, don't know how to analyze the deals. Number 4, don't know how to get the deals closed. Finding and negotiating 2 plus 3, 1 and 4, all 4. Number 4. All right, well, good. We're going to cover a lot of this today, 1 through 4. Raquel, we're getting there. Raquel, we're making some progress on getting you there. All right, 3 plus 4. Good. You gotta know this, right? Like if you don't know what your problem is, or you don't know what's holding you back, then you can't solve it. You can't work on getting better. So it's really important to diagnose where you're at, what's holding you back, and what you need to do moving forward in order to start taking advantage of these real estate deals. We haven't really talked about it today, but I talk about it every time we have these things. I talk about it every time we have our community calls. I talk about it every time we have the boot camp. But right now, there's a very limited time window to take advantage of some commercial real estate deals. The last commercial real estate workshop that we did, we spent the whole time talking about it. But in short, a lot of these people who are going to sell their assets between today and the next 12 months, they have to sell. They probably overpaid for these properties in 2020, 21, 22. They probably got short-term debt because the interest rates were so low and they thought that this was going to go on for forever. And then February of 2022, Federal Reserve started hiking interest rates to combat inflation, and they started getting squeezed. I don't know if anybody here follows, whatever that dude's name is, Roaring Kitty, and the GameStop and meme stocks where, a lot of these retail investors in the stock market will start buying GameStop, or they'll start buying AMC, and the companies aren't worth anything, but they're buying them because they're trying to squeeze out the shorts, right? A lot of institutional investors shorted these stocks, and when people buy these stocks and the stock price goes up, the short gets squeezed and the stock shoots up in value. Well, these people are going to get squeezed. Their debt is coming due. They overpaid for these assets. They can't refinance them today at today's interest rates and at today's values, and they have to sell them. A lot of these properties are going to go back to the banks. Some people are going to try and restructure the loans. They've been trying to restructure the loans. They've tried to raise more equity from their investors and their partners, but they're not going to be able to get it done. Some are, but most are not. And so they're going to have to sell these properties. The banks can't take them back. I don't know if y'all follow, economic news, but last year we had 2 banks fail. This year we had, I think it's First Republic Bank, just failed a few weeks ago. Maybe it was another name, but the banks are failing for many reasons. But the banks don't want these assets. The banks need their money back. And if these investors and the people who bought these deals can't pay the banks back, the banks don't want the deal, they can't refinance it, they can't sell it at the price they bought it for, that leaves one option, and it is for you to come in and steal these deals. It's either going to be you coming in and stealing these deals at low prices, or it's going to be someone like Blackstone or these bigger institutions just coming in and taking up these properties for pennies on the dollar. So right now is the opportunity. But the moment that interest rates start lowering is the moment that this opportunity goes away. I personally believe that we have about 12 more months of this time frame to take advantage of these deals, and you only need one deal to really change your life. All right, you don't need to buy 100 of these to put yourself in a good position. You literally need one deal. It will make you millions of dollars. It'll give you plenty of cash flow and passive income that you could retire on or start retiring on, or at least get you, way further and closer to retirement than anything else ever will. But you have to take advantage of it, and this time is not going to be here for forever. The moment rates start lowering is the moment that values are going to go back up, and these investors are not going to be squeezed anymore, and they're going to have more options. But right now they don't have options other than to sell to you and to us at lower prices. Let's go back to the screen here. All right, so where to find deals, all right? Make sure you write these down. Look at this. This is a good, I like that we put that there. This is my partner, Matthew Tyke, right here. He is our broker. He is a broker. But where to find deals, number one is brokers, real estate brokers, commercial real estate brokers. I'm not talking about, your cousin who's a real estate agent and sold one house last year. I'm talking about commercial real estate brokers who are in the game. They're working with investment firms. They're working with investors. They're working with sellers. They know where the deals are. Their firm is finding these deals and presenting them to the public. Real estate brokers, you build relationships with them. You present to them that you're a closer. You show them that you're serious. You don't waste their time. You start building relationships with these brokers. They're going to start sending you deals. This is where a lot of our deals come from. We get sent, like I said, 30 plus deals a day, from brokers alone. Hey, what do y'all think about this one? Hey, this just came across our desk. Hey, would y'all be interested in this? Hey, would y'all be interested in that? Hey, I know y'all just bought this. How about taking a look at this one? They will send you the deals. They get paid when they sell properties. The seller pays their commission, and they want to find investors to pick up these deals that they're trying to sell, okay? So build relationships with real estate brokers, professionals, all right? All real estate brokers are not built the same. There's some out there who are good. There's some out there who are bad. There's some out there who have no idea what they're doing. There's some out there who are horrible at communication. There's some out there who will waste your time. Go find and build relationships with commercial real estate brokers in whatever market you're looking to invest in. Establish to them that you're a closer. Establish that you'll be able to get these deals done. Tell them your buy box, what you're looking for, and they will send you deals, okay? Next, investors and partners. We have 35 people in here. Is that right, Kat? Live here in this, 37 people here in this Zoom call. There's 37 of us. I guarantee that Timberly in here has a deal for you. I guarantee that Rick in here has a deal for you. I know Raquel's looking at deals in El Paso. Everybody in here is an example of an investor and a partner for yourself. You have to meet people. You have to, start networking. I mean, I'm looking at the chat right now and the chat's silent. If y'all are smart, y'all be in here like, hey, my name's Timberly. Here's my phone number. Please connect. I wanna meet you and we should talk about doing deals. Like y'all need to connect with each other. Sorry to call you out, Timberly. Y'all need to connect with each other. You need to meet each other, because if you don't know each other and you don't have connections and you don't have, people that you can bounce deals off of, and you don't have people that you can partner with, then how are you going to get deals done? How are you going to grow your network? Especially if you don't have the cash or the down payment required to buy these deals. you're going to need investors and partners. So you need to start building those relationships now. And that's a pro tip. You should use this meeting chat to start connecting with people in here so that y'all can partner outside of this live training and get stuff done together. All right, so there's softwares, right? Let me see. Stop sharing my screen here for a sec, Kat. Let's see how I can do this. I want to show you guys what it looks like. I'm going to show y'all two softwares right now that you can use to find commercial real estate deals. I know in my presentation I had CoStar on there. CoStar is a paid subscription, but you don't have to pay for software if you don't want to. Kat, let's go back to shared screen. There we go. I love seeing it in the chat section now. All right, so we're here. So I had in my presentation that you could utilize CoStar, but CoStar is a paid subscription. You don't have to use a paid subscription if you don't want to. We pay like $600 a month for CoStar. It used to be a lot more expensive, but now it's pretty inexpensive, really. But that's where you'll get a lot of the data is the paid subscriptions, but you don't have to do that, right? Especially if you're just starting out. You can go to places like loopnet.com. This is where I'm at right here. Or you can go to places like crexy.com. Crexy, you can build a free portfolio. If you want access to more data and blah, 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 then you can pay for the subscription, but you don't need it. You can create a free one. That's what I have here on Crexy. And you can come in here and start looking for stuff. You can start looking at all the listings. By the way, this is also where you will find brokers to connect with and start building relationships with. But let's look at multifamily deals in Dallas, Texas. I'm here in Austin, but I really like Dallas. I think Dallas might be the best real estate market in Texas. But look, I just type in multifamily deals, Dallas, Texas. You can come in here and edit all these filters. Again, this is free, crexy.com, crexi.com. But you can set up all your parameters. You can set up, searches to where it sends you notifications when something hits the market. But this is also where deals are. Now, maybe what filters do I have set up that it's, oh, I got to click apartment buildings. All right, so you can come in here, start looking at these listings. Now, I'm sure that there's a deal here. And when you're out there looking for deals, here's one thing. No, I'm not moving to Dallas, Timberley, maybe one day. But there is one thing that you need to keep in mind when you're on these sites looking at deals, or when a broker sends you a deal for you to review and look at. Just because this 20-unit multifamily deal is listed at 4.1 million, it does not mean that that is the purchase price. It also does not mean that that is, the final terms. I'm going to show you later the steps to, structure these deals and start going about trying to put them together. But just because it says 4.1 million, it doesn't mean that that's a price. Like I told you, there's a lot of motivation in the market, and a lot of these sellers have to sell. They're trying to sell these properties for way more than they're worth. They're trying to sell them for way more than, they're probably going to get. For all you and I know, we make this phone call and I negotiate a $2.8 million deal, and I bring them down, 33%, which is not unreasonable right now. So Crexy, you can come in here, start looking at deals, start calling these brokers, start building these relationships, start underwriting deals. Even if you have no intention of picking up the phone and calling somebody, you can come in here, view the OMs, and start practicing analyzing deals. It's free. All it costs you is time and a desire. You need two things, all right? To really start taking this to the next step, you need the big D. Kat, what's the big D? The big D, the what? The big D. You need the big D. The big D is desire, number one, and dedication, number two. You need desire and dedication. If you have the desire and you're willing to dedicate yourself to this process, what I'm teaching you guys today, and to what we're going to go over, coming to the boot camp, spending 3 days with us, or whatever, going out in your marketplace and starting to get these deals, you're going to make a lot of progress, but you have to dedicate yourself to it. You have to commit, and you have to see the process all the way through. Real estate and creating wealth in real estate doesn't happen overnight. This is a long-term play. All right, you're going to buy these assets and they're going to pay you over a long period of time. And they're going to create millions and millions of dollars over a long period of time. But it's not going to happen overnight. It's not going to happen just because you attended a 2-hour live training. You got to get out there, dedicate yourself to this, and see your desire all the way through. Let's go back to the slides, please, Kat. All right. So, anyways, these softwares, that's where you can also find these deals. Okay, and they're free. You don't have to pay for one. Next is things like the entrepreneur community and joining in on mentorship groups, being a part of investor clubs, being a part of investor communities, going out there and networking with people, with investors and partners. I'm really glad that a lot of you guys in here started to communicate via the chat. But this is where you can find deals. I guarantee that 36 people in here, someone in here has a deal that you guys can make $1 million on. All right. So what do you look for in these deals? Number one, you need a good location. Tim, really, that's why I'm always talking about Dallas. I love Austin. Austin's just such a small market, honestly. It's such a small market. There's really not a ton to choose from necessarily. It's way smaller than Houston, way smaller than Dallas, but it's a good market. Austin, is doing great. Austin's not, drowning or anything like that, but Austin's just smaller than DFW. But you need a good location, right? Austin, DFW, Houston, San Antonio, maybe. Maybe someone in here can convince me on San Antonio. I'm open to being convinced on San Antonio here in Texas. San Antonio is a big city too, though. But you need a good location, all right? Location, location, location. Location is really important. Location is going to bring you a few things. Location number one is going to bring you better prices when you're selling the deals. It's going to bring you better and higher rents. It's going to bring you better and higher quality tenants. It's going to bring you better and higher quality staff and management companies. It's going to get you better loans. It's going to get you better everything. All right. You're going to have more appreciation there. You're going to have more rent growth there. You are going to have a better deal and a better location. Just because it's cheap doesn't mean it's good. This applies for a lot of things in life. I mean, the cheap thing is not always the best thing. If you're going to buy quality, it's going to cost you some money, but buying something that's quality, that's a little bit more expensive than the cheap thing, will also last you a long time and you'll get way more value from it. So invest in quality, invest in good locations, and the locations and in quality will always take care of you. All right. The bad locations are, they're cheap deals. They're easy to get, but they're hard to get rid of. Nobody wants them. Okay. The cities in Texas that have 1,000 people there, they have, 2,300 people there. The population's been declining. Nobody's been, moving there. No jobs are going there. Nobody wants to be there. The people who live there don't even want to be there. Maybe 2% of those people like it and they want to stay. But everybody else, if they could, they'd probably be somewhere else. But they don't know anything different. But when you're buying real estate, you don't want to invest in those places. You want to invest in good locations. Location, location, location. It's extremely important. Don't compromise location. Buy in good locations. Buy in good cities that have growth. They have jobs. They have good rents. They have good economies. They have people who are moving there. They have increasing populations. They have good management companies. Everybody and everything surrounding your deal is going to want a better location. And when you sell this thing or refinance this thing, the better location will pay off better than, that little bitty city that you're investing in. What are you smiling at? Huh? All right. Oh, Miss Kim's in here. All right. So number 2 is cash flow day 1. All right. Cash flow, in that formula that I was showing you guys a minute ago, don't buy a deal that doesn't cash flow. Number one, it's going to be hard for you to buy a deal that doesn't cash flow to begin with, because you're not going to be able to get debt on it. You're going to have to, go get bridge debt or hard money loans or structure a seller finance deal, which seller finance deals are great, but only on deals that are good and make sense of cash flow. But you need cash flow day 1. Cash flow day 1 means you're buying into a good deal immediately. It means that, someone's not selling you a dream that you have to come in here and do a whole bunch of work to. And even if it doesn't cash flow what it's going to in year 2 or year 3 after you execute your business plan, you still want cash flow day one. If you don't have cash flow day one, you're going to put yourself in a potentially a bad situation. And right now, in the market and the economy that we're in, you have the ability to choose, right? There's so many deals out there and there's so much motivation in the marketplace that you don't have to compromise location. You don't have to compromise cash flow day one. You can go out there and be very picky. These sellers don't have a lot of buyers. There's not a lot of buyers out in the marketplace right now. And you can go out there and pick and choose the best deals to buy, right? You're going to have a list of 10 properties that you've negotiated and the sellers are willing to sell to you, and you're going to say, you know what, this one has better location, this one has better cash flow day one, this one has better upside in the future, this one I can, I like better, it's prettier, I'm proud of this deal better than the other 9, and so I'm buying this one. So you can be picky and you can choose. You have the ability to do that right now when previously you did not. So look for cash flow day one. And all you do is follow this formula right here. This is it. Okay. Income minus operating expenses equals your NOI minus your annual debt equals your cash flow. The ability to add value. So when adding value to deals, I'm not talking about a 92% vacant property that has fire damage that you're going to go in there and renovate every single unit. I'm talking about inefficiencies within the operation and inefficiencies within management. So adding value, and while you may do certain things like some landscaping, maybe you power wash the building, maybe you do some light renovations or upgrades when people are moving out, that's fine, and that's good. But what I'm not talking about is an extensive rehab on an entire 100-unit apartment complex. It's just unnecessary, especially right now. Unless you're buying it for 10% of what it would be worth. If you're just getting an absolute steal and home run, then sure, run your numbers and, base the opportunity based on the other opportunities that you have in front of you. But when I'm saying adding value, what we're talking about is basically raising the NOI here, okay? Now, when I raise the NOI here, I raise the value of the property. Who remembers what I mentioned earlier about, raising NOI and what it means when a property has higher NOI? Put it in the chat. What does it mean when I raise the NOI of the property? You should have it in your notes if you're taking notes. It means higher value. Great job, Rick Stein. When you raise the NOI, it means the value of the property is more. Now, I'll give you an example. All right. So let's go to a new sheet. This is how commercial real estate is valued. This is how it's valued, all right? NOI divided by cap rate equals value. Now we're getting into some higher level stuff here, so write this down, but still basic math. Now, NOI is the net operating income. We just went over that. It is your income minus your operating expenses equals your NOI. Now, the cap rate, this is the capitalization rate. And essentially what it means is that this is the return that you would get if you bought this property cash, okay? Capitalization rate, cap rate, you're going to need to know this term if you're going to go out there and start looking at commercial real estate deals. But each market has a cap rate, okay? Austin, right now, like 4.5 to 5 cap. We're just talking to someone who sold I think it's like 232 unit mobile home park here in Austin off a good location off like 71, and they sold it at a 5 cap. A mobile home park in Austin, 5 cap. That means that if you bought that property in all cash for like 40 million or whatever they sold it for, you would get a 5% return on your money, meaning your NOI here, okay? That you would get 5% of the purchase price and your NOI. Now, Austin, 4.5, 5 cap. DFW, probably same thing, 4.5, 5 cap. San Antonio, we're moving up to the 6.5s to the 7s. Houston, probably same thing. Depends on your location, right? Like if you're on the outskirts of Houston, you're gonna have a different cap rate than you would downtown Houston. Lower the cap rate, lower the risk, higher the quality. Higher the cap rate, higher the risk, lower the quality. Location is a good determination there, okay? So, we're going to teach you all this in the boot camp too, is how to learn all this stuff within your market. But you need to know it, and you need to know what your market's cap rate is. But NOI divided by cap rate equals value. So, let's do some math. When my NOI is $200,000, for example, and I'm in a 5 cap market, my value is how much? Someone do the math for me and put it in the chat. And by the way, it's 5%. So, if you're going to put that in your calculator, it's 0.05, 5%. So take 200,000 and divide it by 0.05, and this gives you your value. Someone put it in the chat, what's your value? Close, Rick, but not quite there. Rick put 40 million. Kat, what's your guess? 200,000 divided by 0.05. Come on, let's see some answers. 4 million. Good job, Leno. You had an extra zero in there, Rick. It's 4 million, okay? Now, I was just telling you the ability to add value is what we're looking for because we want to increase the value of this property. So when I say adding value, back to the slides, what I'm saying is increasing this NOI here. Now, the way that we can increase this NOI here is by raising the rents. Maybe they're below market. I can decrease expenses. I can get better management in there. I can do things like that to add value to the property. So 4 million bucks. So when I add an extra $50,000 worth of NOI to the property and I bring the NOI up to 250,000, we can go to full screen, and it's still the 5 cap market. And I divide now 250,000 divided by 5% cap. My value is what? How much? 250 divided by 5. Is it 5 million? 250 divided by 0.05. That is correct, Rick. It is $5 million. So I added $1 million worth of value when I increased the NOI by 50 grand on this property. Let's go back to the slides. That's what we're looking to do. That's how you add value to the properties. That's how you create that gap. That's how you create $1 million worth of value in less than 12 months, is you find a property where you can create $50,000 worth of NOI by raising the rents, decreasing the expenses, whatever it might be. In a 5 cap market, you'll create $1 million worth of value simply by going to the tenants and saying, hey, your rent is now higher when you renew, okay? It's very simple. It's very easy. You don't have to do extensive work, and you're looking for opportunities that allow you the opportunity to do that. Good debt terms, really important. A lot of reasons, one of the main reasons why we're in the position that we're in today, and a lot of these sellers are in horrible positions, is because they didn't have great debt terms. They had a low interest rate at the time, but they didn't have it locked in for a long period of time, and they mispredicted the market. They didn't think that rates were going to jump up and increase as fast as they did. They thought that we're going to have low interest rates for forever. They thought that this was going to be around for the next 10 years. So they agreed to have short maturity dates, meaning if they bought it in 21, they agreed to have a maturity date on that loan of 3 years or 2024. And that means that this year their loan is due and they have to pay it off. So they have to sell the property or they have to refinance it. It's worth less than they bought it for. They can't refinance it because the debt at 7.5% doesn't make sense when they got it at 3.25%, and they're screwed. And so you need good debt terms. They got too crazy, they got too aggressive, and they misjudged the market. So get good debt terms. Get it for as long as you can. Structure seller finance deals if you can. and negotiate the best debt terms that you can get. But don't go get hard money loans. Don't go get bridge loans. Don't go get debt that's going to mature in 24 months. You need good debt terms. But the good news is that when you buy good assets, they will get good debt terms, and you don't have to compromise. You don't have to compromise yourself there. Okay, so that's what to look for. Um, Now I want to go into how to structure deals. Go back to full screen on me, Kat, please. Let's talk about how to structure deals. All right. How to structure deals. So there's a lot of ways to structure deals. I'm going to show you all the steps of structuring a deal here in a second, but I want to talk through all the different ways that you can structure deals. By the way, did anybody take advantage of the 10-minute deal method? All these things that we ship to you? You know, if you did, you're going to have, this is going to be very valuable for you. If you use this on every single deal, by the way, if you didn't take advantage of it, that's fine. We still give it to you for free. You just pay for the shipping and I'll ship you all this stuff. But I'm going to ship you this. And on this, it shows you the method that you need to follow for every single deal. And it's going to show you the deal requirements, the questions that you need to ask yourself on every single deal. But anyways, structuring the deal, there's a lot of different ways to structure deals. All right, right now, these rates are high. So you're going to get debt terms, and you're not going to want to be in this debt for forever. The moment that interest rates lower, you're going to want to get out of this debt because it's 7.5%. Maybe you're going to get 8.25% if you're lucky and you buy a good enough deal. Maybe you get like 6.5, 6.75% interest on an interest-only loan. But you're going to want to get out of that deal as soon as you can. Out of that loan as soon as you can, and refinance into debt at lower interest rates when interest rates do lower in the next 24 months, hopefully. But you're going to buy deals that make sense with today's debt market because you have to. So that means you're going to pay lower prices for these deals. That means that the sellers are going to have to make sure that the debt is being covered by the NOI, and you're still going to get cash flow. So you're going to freaking steal these deals if you get out there and put into action what I'm teaching you guys. But you can get long-term debt. This is good. Long-term debt. Fannie Freddie loans. A lot of commercial real estate loans, they do have, 5-year maturity dates, right? So even though your loan might be amortized over 20, 25 years, the banks are typically going to want you to sell it or refinance in the next 5 years. That's fine. Just don't lock yourself into it for 2 years on your debt, okay? Don't lock yourself into it for 1 year. But you can lock in long-term debt. You can get interest-only debt. Interest-only debt means that you're not paying principal down when you are making your payments. Now, some people, or you might be sitting here thinking, well, why the hell would I want to do that? I want to pay down my principal. I don't want to just pay interest. But what happens when you don't pay your principal down is it means you have a lower debt payment. When you have a lower debt payment, it means you have more cash flow. Okay. And you're not locked into these loans for, 30 years like you are a traditional home mortgage. You're going to be in it for 5 years. The first 5 years, you're not paying down that much principal anyways. It's mostly just interest. And so if you can get interest-only debt, it means that your payments are going to be lower and you're going to have more cash flow. So it's not a bad thing. It's highly desired, actually. So long-term debt, interest-only loans, you might be able to get, and you should try and structure it if you can. Long-term debt, interest-only, interest-only. All right. You can get bridge debt. Bridge debt or hard money. Avoid like the plague. You don't need to get bridge debt or hard money loans. All right. You're going to be buying good deals. If you follow what I'm teaching here, and if you follow what we tell you to do, you're going to go out there and you're going to follow these things right here. Go back to my screen cap. And do you mind grabbing me another water, please? You're going to follow these things here. You're going to get a good location, cash flow day one, ability to add value, and you're going to get good debt terms. So you're not going to have to go get bridge debt or a hard money loan. Thank you. Let's go back to full screen. What this means, bridge debt and hard money loans. I'm going to mark that through so you don't focus on getting it. Bridge debt and hard money loans are going to be high interest rate loans. They're going to be short term. So you're only going to have it for about 12 months. It is going to be interest only payments, but your interest rate on these loans are going to be like 10, 11, 12%, versus, 6.5%, 7% that you're going to get from a good lender on a good loan. The only reason that you should get bridge debt or a hard money loan right now is if you're buying a property that needs a ton of work and you're just absolutely stealing it and basically getting it for free. All right, because once and you better have a good team in place, you better have good contractors, a good business plan, and be ready to see this all the way through, because if you can't get out of that bridge debt or that hard money loan at the end of the 12 months, you're going to be in the same position that these sellers are currently in. All right, you're going to have a short time frame. Your payments are going to be extremely high, but use it in the 1% circumstance where it really makes sense, on deals that you're basically just stealing and they can't qualify for other loans that are going to take care of you. Bridge debt and hard money, avoid it like the plague. You don't need it. It's not required. You should not put yourself in a position where that's the case for a good deal, because the good deal will qualify for the better debt. All right. Other loans that you can get, and other ways that you can structure deals. Seller finance deals. Seller finance deals, a great time to structure seller finance deals right now. Seller finance deals are an agreement between you, the buyer, and the seller. And the reason seller finance deals are great is because it's 100% negotiable. Whatever you and the seller negotiate and agree on is the terms of the loan. With seller finance loan, there's typically no appraisals. There's typically no origination points. They're not pulling your credit. You're not going through the traditional bank process, and you can 100% structure the thing, right? Every part of it is negotiable. The term of the loan is negotiable. The interest rate is negotiable. The payment amount is negotiable. The down payment is negotiable. Of course, the price is negotiable. The amortization is negotiable. The entire thing is negotiable. So, if Rick and I are negotiating the seller finance deal, he's the seller. Then you can, if Rick's the seller, I'm the buyer, I can say, hey, Rick, I'll pay your price of $9 million, but only if you can seller finance to me. I'll give you $200,000 down, which is very low on $9 million. And I need my monthly payments to be 15 grand a month. If you'll do that for me, I'll pay your $9 million. I'll give you 200 grand down. I'll pay you $15,000 a month. And we'll do this for the next 20 years. I'll pay you, 15 grand a month until it's paid off. And if Rick and I agree to it, then that's the terms. He doesn't have to go to a board and get it approved. I don't have somebody telling me what the minimum down payment requirement is. I don't have somebody telling me what the minimum interest rate is. So it's the Wild West. And if you're creative enough and you know how to structure these deals and you know how to look for these deals and then work these deals, then you can go in and really steal some deals via seller finance. One of our most recent TR3 capital deals that we just bought with our investors was a seller finance transaction. This one right here, the RV resort, TR3 RV resort, we bought this thing on seller finance terms. This guy has owned it for, a few years. He built this himself. This thing's really nice. Go back to me on full screen, Kat, real fast. So this thing, sorry, Kat, you're doing such a good job, and thank you for working with me. All right, let's do it like this. I want to, all right, you can show my screen now. Check this thing out. These are actually pictures Kat took. So this place is really nice. It's concrete. It's 109 RV slots. They say 113 here. The sign is wrong, but it's Class A. It's super nice. It's pristine condition, resort quality. It is an RV park, RV resort. We named it. It's got palm trees everywhere. It's got this really nice pool. It's got a hot tub in the shape of Texas. It's got all the Class A amenities. This is that laundry facility that I said makes us 60 to 80 bucks a day. Cha-ching, no effort on our part. Goes straight into our bank account. But this deal right here, super nice deal. The guy built it, and it's really nice. It's fully occupied. It's 20 minutes from Dallas, Texas, and he wanted $7 million for it. We negotiated this deal for months. My partner Robert with TR3 Capital, worked this deal for months and months, fighting with this guy on terms for us to buy this thing. And what we landed on was, look, we'll give you your $7 million. We'll pay you your $7 million bucks. But I want to bring back up that pool. We'll just leave that up there. I want to go swimming in this thing. We'll pay your $7 million, but we're only going to give you $1.4 million down. And we need our monthly payments to be at max $28,000 a month. And also, Robert negotiated 0% interest. So every single $28,000 payment that we make is paying down our principal of $5.7 million. We restructured it later where we actually paid $7.1 million. In the first 6 months, he gave us $20,000 monthly payments versus $28,000. So we traded some value there, which we're going to make more than that anyways on the extra. But 0% interest. Every single payment that we make is going towards our principal balance. If we didn't make any cash flow, if we didn't increase the value at all on this deal, if we strictly broke even for 5 years, at the end of the 5 years, we would have made about $1.5 million simply by making our mortgage payments. Now, this is the value of seller finance deals. If we were to have gone to a bank, our payment would probably be much higher than it currently is. We'd be paying, 7.5%, 8% interest rate. The principal pay down that we would have would be, like 1/10 of what it currently is. And so it just wouldn't have been possible, right? They probably would have required more down as well. But because it was seller finance, the entire thing was negotiable. So write this down. If you can find a seller who has the ability to seller finance you the deal, which some do right now, because not everybody today is selling because they overpaid for it in 2021 and their debt's coming due. There's plenty of people out there right now who need to sell, not for that reason, some other emotional reason, for whatever reason they want to get out of this deal. Like this guy, for example, he was sick. He didn't want this property to be left with his family, and he wanted to sell this property. But he was not in a bad position financially. He didn't have the bank knocking at his door. And we paid off his loan with our down payment, therefore leaving him the ability to seller finance us the rest. So you're looking for opportunities like that where you can structure seller finance deals. And when you're able to go out there and find those, then you can really structure amazing deals, especially today, because interest rates are so high and it doesn't make sense, for the most part, buying at their price with today's interest rates, because it's hard to make sense. It's a great question. Someone asked, curious why he agreed to 0% interest other than the monthly note payment. Yeah, it's a good question. I mean, I believe he had been negotiating this before with somebody else, and they offered him, a some price and some payment amount at 0% interest. So we just rolled with it and we said, yeah, we'll do that term, but we'll pay your price and we want 0% interest, and we need our payments to be 28 grand a month. And so there wasn't a fight. He was on board with it, and we didn't question him why. So anyways, all right, how to structure deals. So these are all the different loan types that you can get. Right now you want long-term debt, interest-only debt, seller finance debt if you can secure it. So moving on to how to structure deals here. Number one, this is the step-by-step process of how to structure deals. When you're going on Crexy and you're running the numbers and you're looking at deals and you're looking at stuff in your market, you need to call the broker. Do not just pull the OM, run your numbers, and decide whether or not you got a deal. Because like I told you earlier, if the deal right here is listed at, what was it listed at? It was listed at like 4 million, I think. If this deal right here is listed at 5.5 million, it doesn't mean that that's the price that you're going to buy it at. Maybe you can structure the seller finance deal, but you'll never know that if you don't pick up the phone, call the broker, and start. If you don't pick up the phone, call the broker, and start learning what the story and the motivation is here. But you have to call the broker to do that. You have to call the broker, the seller. You call the listing. You say, "Hey, Rick. My name's Alex Kaufman out here in Austin, Texas. I'm a multifamily investor, and I'm calling about this property here. I wanted to learn, what the story is. Can you tell me a little bit about it? I see you've been listed for, 90 days. What's going on? Have you had any offers?" You start asking questions. You need to be curious. You need to figure out what's going on with the property. Why is it sitting there? Why is the seller selling? What is he willing to sell for? And what can I come in and take advantage of here? Again, with the 10-minute deal method, this is the opportunity. What's the opportunity with this deal, and what is the seller's motivation? You need to know this before you move any steps further, because it's pointless running a formula in a spreadsheet when you don't know the story and the motivation and how you're going to structure this thing. So you got to pick up the phone, you got to make the phone call, and you got to start talking to people, okay? Then you learn the motivation. Why are they selling? Like I told you with this guy right here, he was selling because he was sick. He didn't want to leave this property for his family. He was ready to get out. He probably made a lot of money on this thing. He built it. He only had a $1.3 million loan on it. We paid, $7 million with seller financing note. So he's going to make, or his family's going to make a lot of money on this deal over time. But you need to learn the motivation. You need to learn the story and what is going on. The motivation is extremely important. If you don't know the motivation and you don't know the story, then it's going to be impossible for you to structure the deal. Similar to like we were talking about earlier, where I asked you, which one of these is holding you back from investing in real estate? Is it number one, number two, number three, number four? The knowledge and the uncertainty. You don't know how to find deals. You don't know how to analyze deals. You don't know how to close deals. Similar thing here, because if you don't know what the problem is, the problem of the seller, then it's going to be impossible for you to provide a solution. So you need to call the broker, call the seller, and learn the motivation and learn the story of what's going on. Then you need to underwrite the deal. Underwriting the deal is not much more complicated than what I showed you guys a minute ago with that simple math formula. But you need to underwrite the deal and figure out, how am I going to structure this? Will it work with bank financing? Will it work only with interest-only debt? Will it work with seller financing? If he's open to seller financing, and I learned that because I made the phone call and I learned the motivation, then how can I structure this? He says he wants this price. Okay, if I give them this price, then here's what I need my down payment to be, and here's what I need my monthly payment to be, because here's my NOI. By the way, they are this far below market rent. So I know that immediately when I buy this thing, I can increase the rents by X amount. The operating expenses, I know that I can operate this thing for 40%, but they're showing that they're operating at 55%. I'm not going to tell them that, but I know in my mind that immediately when I buy this thing, I can decrease the expenses because they're overpaying in these areas, okay? So you need to underwrite the deal. Next, what you need to do is actually make an offer. You're never going to buy real estate if you don't make an offer. So send them an LOI, send them an offer, tell the broker to write it up. But once you call the broker, you learn the motivation, you learn the story, you've underwritten the deal, you've structured it and figured out how you need to take it, then you need to make the offer and lock it up. A lot of people over the years of teaching people and owning the brokerage and people asking us for help investing, is when we tell them to make an offer, they say, well, what happens if it gets accepted? It's like, well, if it gets accepted, then you got a deal, hopefully. Then you take it the next steps and you take it all the way through. but don't be afraid of getting your offer accepted. Remember, I said you need you need two things. You need the big D, desire and dedication. Desire and dedication. When you have the dedication, you're sending these offers out and you're structuring them and you're learning the motivation, you're underwriting the deal, and they accept your offer. This is a good thing. This is what you wanted to happen, right? Now, sometimes when people accept my offers, it's not because I'm scared of what's next, but I think to myself, shit, I offered too much. You know, we should have had a little bit more negotiations here. I should have been more aggressive on this or on that, but that's okay. You need to make the offer, and your goal is to get deals under contract and take them all the way through the closing process. All right. And last but not least, one of the last things we're going to touch on today, and I'm going to open this up for Q&A here in a minute, but building your team is extremely important. All right. You're not going to do this alone. You need a good team. You need a solid team. You need a strong team. And real estate is not a solo sport. It's a team sport, and you're gonna need a team. So, team members, I hope, scroll me on this chat and let's see how many people commented in here. I know I saw Raquel talking about, we got like 1, 2. Just keep going. Try and count out loud. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. All right, so we had like 10 people in here trying to connect with each other. That's what you want to do. All right. You need to build your team. You need to build your team of partners, investors, lenders, brokers, property managers, contractors, insurance agents. You're going to need all these people to do these real estate deals. And they're going to help you get these real estate deals done. And it's a good thing. All right. You know, that means that you're not doing all this work by yourself. So you need to build a team. We don't have Matt's picture here. Yeah, plural. You could have put him there twice. So the first team member that you need, again, is real estate brokers. These brokers are going to bring you the deals. These relationships are really important, and you need to have these relationships with these brokers. They're going to help you in a lot of ways. All right. So number one, they're going to bring you deals. Number two, they know investors that they can connect you with. They know insurance brokers that they can connect you with. They have lenders that they can connect you with. They have the contacts. You can use them and you can use their network to build your network, but also they're going to bring you deals. Okay. Next is investors. We already talked about this. Ray, comment in here if, let's say, I need you guys to participate so I can fully understand where we're at here, because I'm trying to help you, and so I want to give you information that's relevant. So comment in here, number one, if you do not have, let's say, the down payment that would be required to buy a $2 million apartment complex on your own. All right, 1, 1, 1, 1, 1, 1, 1, 1, 1, 1, 1. I get it. All right, that's good. All right, so again, you know, you don't need the down payment yourself. That's okay. But what you do need, if this is the case, thank you everybody for participating. So for everybody who commented 1, this is really, 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 really important. So write this down and make sure you listen. Not only do you need the real estate broker relationships to bring you deals, to bring you the lenders, to bring you other investors, connect you with insurance brokers, connect you with property managers, but you need investors and partners, okay? If you do not have the capital to do these bigger deals, if you don't expand your network and start building relationships with investors and partners, you're never going to do these deals, right? How are you going to do the deals that require capital to buy the deals if you don't have the capital to buy the deals? You find people who have the capital to buy the deals, you bring them in on your team, you let them invest with you, you put the deal together, you raise the capital from them, and then all of you guys partner together and buy that deal. Now, don't let partners scare you. Don't let investors and the term investors scare you, okay? Investors and partners are good, and you're going to set this up in a way to where, you know, it's not a bad marriage, all right? A lot of people get scared of having partners and such, especially in business, because they're afraid it's going to turn out wrong. And a lot of times it does, honestly, in traditional businesses. Real estate's a little bit different. When you're structuring real estate deals and you're raising capital from investors, it's not like a traditional business partner relationship. in the sense of you guys like working together every single day and executing this business plan and all that stuff, right? If somebody's just giving you capital to invest in your deal and you're simply just paying them a return, that's about the extent that it goes to. Okay, so don't get scared of having investors and partners. You need them. You want them. You want to befriend them. You want to make them successful. You want to make them wealthy, because all of you guys are going to grow together. So you need investors, all right? And you need to start adding investors to your team. How many people are still here? We have, what, 36? We have, it's hard to read the screen. So we have 36 people still here in this Zoom call. Last time I checked, it was 37. So you guys are sticking around. But most importantly is that I guarantee that all 35 of you, because I'm in here as well, I guarantee that all 35 of you know at least 10 people who would be interested and willing to invest in your deals. Rick, I'm giving away your secrets, but I asked Rick how big his list was. He said he had 60, right? I'm sure a lot of you probably have 50 plus, 60 plus investors in your phone book, relationships, who would be happy to invest in your deals, but they'll never know about it if you don't reach out to them and start telling them that you are going to start putting deals together like this and you want to partner with them, okay? But you need investors and partners. You need to start nurturing those relationships. You need to start bringing them into, your communication, into what you're doing, so that when you have a deal and it's ready to go, you can bring them in and they can invest with you. But you can buy these deals without your money, all right? You can partner with people and bring in investors and partners. And if you plan on growing big and scaling, that's what you're going to need to do anyways. All right, lenders, you're going to need to get debt on the deals. Most likely, you're not going to buy these properties cash, nor do you probably want to. A lot of people are buying, bigger institutions are buying properties cash right now, and it's because it's impossible to make the deals make sense with debt today. All right, so they're buying the properties cash, but these deals are like the best deals out there. They're the best locations. They're the lowest cap rates. They have the lowest cash on cash return. So it's almost impossible to do those deals with debt. The deals that you're going to go out, those are like $150 million deals, all right? The deals that you're going to go out there and start looking for are going to be like $2 million deals, 32 unit apartment complex. You're going to maybe go look at an industrial warehouse. You're going to go find a, retail strip center. These deals will support debt at today's rates if you negotiate them at the right price and if you find the right level of motivation, okay? So you're going to want to get debt on these deals. You're also going to want to refinance out of this debt the moment that interest rates lower, so that you can increase your cash flow, pull your cash out, and be in these things for $0, all right? And have an infinite return. But you need to start building relationships with lenders. Mortgage brokers, commercial real estate lenders who can fund and finance your deals. And last but not least, on building your team is the property manager. Property managers are very key. Back to the single family stuff, the 2 to 4 units. Sometimes people try and make these deals make sense by saying, I'm going to do the property management. I'm going to do all the, contracting work. I'm going to do it myself and I'm going to save money. There's a Twitter post earlier that said, I'm going to save $35,000 a year by managing the property myself. All right, that's cool. You probably make more than $35,000 at your job right now. I hope you do. If not, I guarantee you're going to make more than $35,000 on these deals that I'm teaching you to buy. All right, so don't worry about pinching these pennies. You want somebody else to do it, especially if you're looking to grow and scale. All right, you want somebody who's good at it. You want somebody who has the connections. You want somebody who has the systems, the processes. They're going to deal with the tenants, the toilets, the termites, all that stuff you hear about, while you focus on going and building more relationships with investors and finding more deals to buy that are going to make you millions of dollars, not pennies, by trying to manage these properties by yourself. And you also don't want to. If you're anything like me, you don't have the patience for it. Why torture yourself? Why give yourself another full-time job? You're, trying to get into real estate investing and build wealth and have financial freedom, not to go get another low-paying job that somebody else would do for $12 an hour. All right. You're selling your time short. You don't need to do it. It's a waste of your time. You're not good at it, and you should let the professional do it. So you need property managers, and there's really great property management companies out there that will take care of your properties. Now, the single family homes, the duplexes, the triplexes, the quadplexes, you're going to kind of just get what you get. The bigger the deal gets, the better the quality of the manager, right? The single family home that we own here in Austin, one of them, the property manager makes like $125 a month, maybe less on the property management fee. Who is going to care about, a $500,000 asset when they're only getting paid $100 a month? You know, it's hard to get somebody to truly care about it and take it seriously because I'm paying them so little. And that's the going rate. 8%, 10%, 7%. We negotiated a little bit better rate because we have such, quantity of these things that we give them a big portfolio. But like the small stuff, it's going to be hard to find good managers to really actually care about your property because you're barely paying them $100 a month, $1,000 a year. They're not going to fight for your maintenance. They're not going to, give you a lot of time. They're not going to, fight to make to raise the rents as high as they can. They're not going to fight to negotiate the best deals, etc. They're going to fight to make their job as easy and seamless as possible because you're only paying them $100 a month. When you go and you buy the 32-unit apartment complex and you're paying that manager, let's just say $2,500 a month, it's much easier to get that person to care about their job and what they're doing when you're paying them 25 times what, they would be getting at a single family home. All right. The, on-site staff at our RV resort, right? We pay them salary. They get a place to live, and they care about their job. We're paying them good. This is their income, right? When you're moving up and buying a 50 unit, a 100 unit, you're going to have employees there and staff, and a property management company oversees them. But they're going to oversee all these operations, and they're going to do what you tell them to do. And they're going to keep expenses low. They're going to get the rents where they need to be. They're going to keep occupancy up. And they are going to be the ones who are in charge of the day-to-day of ensuring that this investment prints money for you. So you want a good manager. You don't want to do it yourself. And you need to start building relationships with these property managers and interviewing them. That way, when you have a deal, you can bring the right property manager to your deal, and you don't have to deal with it yourself. I know I told you earlier that if there's one thing you should take away today, which was to think bigger and figure out what that next step is and get that big D, the desire and the dedication. Well, there's another thing I want you to take away from today is how important this team is. You're not going to be able to do this alone. You need the broker, the investor, the lender, and never try and manage these properties on your own. Hire quality managers and get them to oversee the execution so that you can go and repeat the process and buy more deals. All right. Do we have a lot of questions here in the chat? I want to answer some of these. But before we do, I want to dive through one more time what we're offering today with the trauniversity.com/now offer. Like I mentioned, you're going to get the commercial real estate investing essentials courses. This is a course bundle. You get 6 courses. It's going to cover the basics of commercial real estate investing. It's going to go through in depth and in detail how to find, how to analyze, what to look for in these deals, how to build your team more in detail than we covered today, exactly what we look for in the deals and our exact deal criteria. It's going to show you how to go about actually getting these loans, how to prepare yourself to speak with these lenders, what they're going to ask for and what they're going to need. And last but not least, it's also going to cover investors and partners and how to go about building an investor database. 6 courses, commercial real estate investing, analyzing commercial real estate deals. I didn't realize that was even up there. Analyzing commercial real estate deals, securing financing for your deals, where to find partners and investors. We sell this course bundle for $9,997, but you're going to get it today for only $97 a month. The other thing that you're going to get, and by the way, like I said, you can cancel at any time. The other thing that you're going to get, no commitment, is you're going to get a general admission ticket to the One Deal Away Bootcamp. This is something that we put on every single month The next one is on June 4th through June 6th. It's virtual, so you can attend anywhere. There are some people here in Ohio and Austin and Dallas and Houston, etc. You don't have to travel. You just turn on your computer just like you did today. I'm going to ship you one of these workbooks right here. I think this is it. Well, this is the workshop, but I'm going to ship you one of these workbooks. And we're going to spend 3 full days together. Day 1 is going to be all about finding great deals. That's okay. Day 2 is all about underwriting great deals. We're going to go through in-depth all the formulas. I'm going to underwrite these deals with you. Day 1, I'm going to work through your market, show you what you need to learn in your market. Day 2, we're going to underwrite those deals in your market, and you're going to have homework each day, right? You're going to have action steps on. Day 1, I need to complete this and bring this to day 2. And then we're going to go over it. I'm going to answer your questions and we're going to run through it together. Day 2, we're going to start underwriting deals in your market. Okay. We're going to underwrite the deals. We're going to go through the formulas. And day 2, at the end of it, you're going to leave there. And the rest of the day, you're going to go find 10 deals and you're going to underwrite them so that we can come back the next day and start negotiating these and sending offers. Day number 3, we're going to negotiate these deals that you brought live, me and you, and everybody else is going to get to witness. And I'm going to help you negotiate these deals. I'm going to give you the LOI template. I'm going to show you how to fill it out. And you're going to send an offer on a deal that'll make you $1 million, a deal that'll change your life. The reason we named it is One Deal Away Bootcamp. It's because you're literally one deal away from closing on and changing your life. All right. I told you this earlier. Right now's the time. There's no better time than now to buy commercial real estate deals. It'll still be a good time, 3 years from now. Commercial real estate deals are going to be great. But right now you have the opportunity to literally steal these things from people who are forced to sell, from people who have to sell, and you're going to get an amazing price. And that price is going to be worth a lot more in 3 years from now when interest rates lower. Okay. So I'm going to negotiate these deals live with you. We're going to call the brokers. I'm going to show you how to write the LOI, and you're going to send an offer on one of these deals. Okay. And then day number 4, only for VIP ticket holders. It's an exclusive day with me and the VIP members. And we're going to go through Q&A. You're also going to get one of these things when you get your VIP ticket if you upgrade. This is like, I don't know how many pages. It's like 200 pages of contracts, leases, LOI templates, due diligence checklists, purchase and sale agreement, assignment contracts, earnest money, termination, raising capital documents. What else is in there? Company agreements, JV partnerships. It's a collection of all the contracts, leases, etc. That we use on our deals. And you get that when you do upgrade to the VIP. We're going to go through that, everything in there, and also an exclusive Q&A session with me and the other VIP ticket holders. We sell these tickets. So, I mean, like, you can take advantage of this offer, get a free ticket, or later, if you didn't take advantage of this, you could just buy a ticket to attend as well. But it's June 4th through June 6th, virtual. But it's going to cost you more than $97. So a free ticket general admission is included with this offer today. You get the course bundle and you get a free general admission ticket to the boot camp. So the boot camp in June, the next one is June 4th through June 6th. And then the VIP ticket holders come back on June 7th. It's a Tuesday through a Friday from about 11 a.m. Central Standard Time to about 2 p.m. give or take Central Standard Time. And I send you home and away from the boot camp with action steps and items that you need to complete. So you come back the next day. And in literally 3 to 4 days, if you just participate and show up and do what I tell you to do, by the end of that boot camp, you'll have sent an offer on a deal that will change your life. I guarantee it. And if you show up and you participate and you do what I tell you to do, and you don't send an offer on a deal that will change your life, then I'll give you your money back. It's not about $97. It's about finding people who are serious, right? The $97 for this stuff literally means nothing to us. It doesn't do a whole lot for us. But what it does do is it separates the people who are just window shopping. They're attending these things. They're really not that serious. They don't have that big D. They don't have that big desire. They don't have that big dedication. And they're really just kind of, roaming around. We're looking for the people who got the desire. We're looking for the people who have the dedication so that we can partner together and start doing some deals together. All right. So that's what I got right now. I do want to bring some people up here and answer any questions that you have. I know that we just covered a ton of information. I told you that you'd be drinking from a fire hose of commercial real estate info. It's impossible to teach you guys everything that I know, in an hour and a half in a 30-minute Q&A session. 7 years of working at this 24/7 and tons of deals. But that's what this is for. I want to answer your questions. And also that's what for the boot camp is for, so that we can literally do this together over a 3-4 day period. But if you do have any questions, Kat, can you scroll up in the chat so I can try and answer some of these? But I do want to bring anybody up on stage here who does actually have some questions you want to ask me right now. Just raise your hand. My team will pull you up and you can ask your question live. All right, so we have a question here from Raquel. Is it necessary to create an LLC with every deal generated, since the name of the investors have to be on the loan? So hold on, leave me there for a sec, Kat. So when you're raising capital from investors, it's going to be a little bit different of a setup. You will have different LLCs if you have different investors, but it's going to be set up in a different way, most likely than just a traditional LLC. And your investors who are investing passively with you are not signing on the debt. They're not responsible. They're a limited partner. They're a passive investor, so they are not responsible for the debt. You, the general partner, we talked about this today, Raquel. You, the general partner, you are responsible for the debt. The limited partners is what it means, right? And it's in the name. They're limited. So they don't have the liability that the general partners have if they're signing on the debt. But they're also limited in the decision making, and that's all on the general partners. So if you're doing it in that structure, the GPLP structure, then yes, you'll create a new LLC for each deal that has a different set or group of investors. But if it's just you out there, you can buy, or it's you and the same partners, y'all could continue to buy real estate in the same LLC. All right, go ahead, Kat, to the next one. What are your thoughts? Can you read that to me, Kat? I can't. On possible deflation. Rob, can we bring Rob up so he can ask that live? Rob, can you explain your thought process there for me, sir?
Yeah. So this is kind of something I heard from the Reventure consulting guy, Nick Dorelli. I don't know if you follow him at all, but one of his thoughts is that there's possible deflation that could happen with the interest rates in the economy. I have my own opinion on that, but I'm kind of curious what your thoughts on that are.
Sure. Yeah, well, I'll tell you what's happening with real estate prices as inflation is happening and interest rates are rising, is real estate prices are not increasing right now. Real estate prices have been deflating and depreciating as the Fed and everybody's been trying to combat inflation. I don't think that I'm also not an economist, and the Federal Reserve and the government usually does the opposite of what I think is logical. But I have a feeling that inflation, we're not at a risk of deflation. It's probably the complete opposite. I mean, we're at such a risk of continuing inflation that this is why they're, keeping interest rates where they're at. And the moment they start lowering interest rates, things are going to heat back up again. The weird thing is that like yesterday, I don't know what it did today, but yesterday the stock market, S&P 500 hit an all-time high. yesterday. It dropped today. Oh, I'm wrong. 50 new 52-week high, new all-time high in the S&P 500. So the S&P 500 hit an all-time high today. It did yesterday as well. Maybe it will tomorrow too. So the economy, is not doing that hot. Interest rates are high. People can't afford things. The middle class is getting squished. The lower class and lower income earners are also getting squished. Their income is not increasing. The price for everything is increasing, and inflation is killing them. Yet, all the while that that's happening, due to the fact that, all the stimulation that the government did over the last 4 years has really propped everything up. And right now, the stocks are hitting all-time highs, right? So there's still, it seems like there's a lot of pain that needs to come. And, the Federal Reserve was talking about lowering interest rates 6 times this year, right? Inflation is still high. Inflation is not where they want it to be. I guarantee that they don't see, and they've mentioned this, that they're going to remain where they're at. They probably should be increasing rates, honestly, but, they're not lowering rates anytime soon. Inflation's still up there. The moment they start lowering rates is the moment that assets and everything else is going to increase in value. So I think that we're probably at more risk of having inflation just remain high, which is good if you own real estate because that means your asset prices are going to continue to rise. All right. What's the next one? How much money do I need to raise from investors once I find the deal? What things do I can we bring Ephraim up here? I appreciate you guys putting these in the chat. I'd love it if I could bring you on stage, especially for like a long question or multiple questions so that I could hear you out and really, go through it with you. Can we ask Ephraim to unmute himself?
You hear me?
Yes, sir.
Oh, thank you for bringing me up, everybody. Yes, it's just like, for example, we keep talking about the deal, right? Let's say we have a 10 million deal, $10 million, and let's say down payment is 25% of that, so about $2.5 million, right? So when I go to my investors and I get the $2.5 million, I know for sure they're going to need some more money to cover some extra expenses such as closing costs and some other things, right? So how much money should I get from the investors or raise that money from, right? Just to
Yeah.
make sure that I have enough money to close the whole deal, right? Because if I get the $2.5 million and then closing cost adds up and everything else, I'm going to be coming short from that amount of money, right?
Yep. Very, very good question, Ephraim, and thank you for asking that. I hope I'm saying your name right. So yes, that's correct. Whatever your down payment is, it's going to be like in that example, $10 million purchase price, 25% down, that'd be $2.5 million down. You're also going to have closing costs such as attorney fees, you're going to have escrow costs, you're going to have title insurance, you're going to have loan origination costs. So, good news is that once you get this deal under contract and you're with a title company or a title attorney, they can provide you a list and an estimate of, all right, here's your estimated closing costs per the contract, right? So they'll be able to actually tell you what that number is before you need to finalize the amount that you raise. But like, for example, on this deal that we just closed here, this was a seller finance deal, so we didn't have loan origination costs. We negotiated that the seller was going to pay for the title policy and most of the title closing costs. So the only closing costs that we paid to title for escrow, recording the deeds, the notes, etc., on a $7.1 million deal was like $2,300. The seller paid over like 30 grand, but we negotiated that in our contract and as part of our deal. But you can ask the title attorney to tell you how much, but yes, you definitely need to raise the down payment. You need to raise your closing costs that are going to be with the loan and with the title company or the title attorney. Then you're also going to need to raise any reserves or CapEx budget, right? So like if you need to go and put $100,000 into landscaping and a new roof and this or that, then you need to raise that amount as well. And also, you don't want to start your bank account with $0, right? You want to have some reserves to protect yourself just in case things don't go according to plan, or maybe 1 month, it's not as good as the others. And so having some reserves in your bank account as well is going to protect you and your investors, and also the bank may even require it. So those are kind of all the things that you should be factoring into the amount that you are raising. And you don't need to know those amounts today exactly. Just know that they're going to be more than just your down payment. And you can ask your lender what the origination points are. They're going to tell you, 1% of the loan balance. And then once you go under contract, based on whatever you negotiated in your contract, you can ask the title attorney or the title company to give you an estimate on what your closing costs are going to be. But really great question. Did Ephraim, did you have anything else?
So yeah, thank you again. Just one more quick question is, for example, once you get the deal, you close the deal, and you have your investors in that property already, and you got the deal, closed it, and it's good. I've seen some people that actually keep adding investors to that, right? To the same deals. How can is that even possible? You can just, for example, if I have this apartment complex and I just purchase it, the deal is closed, I got the money and I pay for it, and I see people sometimes they just keep adding investors to the same building, to the same complex. But then again, my question is how does that work when it comes to actually pay them off, right? Yeah, because if you have a lot of people actually giving you money and you have this amount already providing this kind of money, right? How do you pay them off?
Good question. So you would pay them off. I mean, it's hard to say exactly because I don't, if we had a specific scenario and I could see exactly how it was structured, I would know. But like the way that you pay your investors off is that, first of all, you're splitting the profits with them, right? So maybe it's a 70-30 split, 80-20 split, meaning that let's say you get $10,000 worth of cash flow this month, okay? And you're splitting it 80-20 with your investors, meaning the investors are going to get 80% of the profits, you get 20% of the profits. If you had $10,000 worth of cash flow, 8,000 would get paid out to the investors, and it's all documented, right? Like their percentage ownership in the deal and of the investor portion of the deal is based on the amount that they put in. So out of the 8,000, you would send out each individual amount to each investor based on their percentage ownership in the deal. And then you, the general partner, would be left with that extra 20%. That would be your portion, or $2,000, right? And then if you do a refinance on the deal, I mean, all of this is negotiable with your investors and stuff, right? There's not a strict way to do it, but the way that we do it is like if we did a cash out refinance on the deal, and we were getting all the money back that was originally invested by the investors, we would pay all that money back to the investors. We would pay them back all of their original investment, and then anything left over would be split per the splits. And so that would be the case in the cash out refinance and the case in the sale where there's an equity event and cash comes into the entity. Investors get paid back first, and then the profits get split. Now, to answer your original question on like adding more people, it really doesn't make sense to do that if you got a good deal. But a lot of people right now are doing that because they need more money. They bought bad deals. They bought bad deals. The deals can't sustain themselves. They need to refinance out of these deals. In order to refinance out of these deals, they need to raise an extra $1 million or $500,000 to buy down a rate cap because rates are so high right now. Or, the value is so low that they have to bring cash to close a refinance because their value is so far below. And so that's why people are doing it right now. And that's what they're trying to do. But, as you just mentioned, and as I just mentioned, it doesn't sound attractive. So nobody's extremely excited about doing that. And it's not really a valid, option for them, even though they're trying to exhaust it. But that's the reason that they're doing that right now, is because they bought bad deals, they overpaid, they didn't have good debt terms, and they're kind of screwed, unfortunately. And so that's why they're doing that. But otherwise, it doesn't make sense to do it, because there's no need to have extra money in there. And if you bring in more people with more money, it's just diluting the ownership of the current investors. And now they own less for money that's not even being utilized. Unless you were going to use it to like build another complex or something, or build something else. I mean, maybe it makes sense there. But if you got a building, you're not doing anything extra, it's cash flowing and doing well, you don't need the money, it doesn't make sense to take on more investors and dilute everybody's ownership just to have cash sit there or just get redistributed back out to everybody. Great question, Ephraim. And thank you for being here and committing and participating. We got Rick Stein. Can we bring Rick Stein up here?
Yes, you can. Hey, Alex.
Hey, Rick.
So I have a question based on the conversation you and I had this afternoon during the pitch.
Yep.
Okay. So you said that you refinance the property, you cash out, everyone gets their money back, but they're still getting monthly payments even though they've gotten their money back. Is that because they're still owners of the property? They're not lenders, they're owners.
Ask me that last part. Is that because they're owners in the deal?
Okay, so they've been cashed out. They've
Yeah.
gotten all their investment back, but you
Right.
said they're still getting, monthly or quarterly payments depending upon how you structured it. So if they've gotten all their money back, why are they still getting payments? Is it because they are not actually lenders, but they're owners?
Yeah. I mean, that's why. And again, all of this is negotiable. There's no exact way you have to structure it. That's how we structure our deals, because we want to take care of the people who are investing with us, right? Like if I'm investing in a deal, I would want that to happen to me. If I put up my money to invest in this deal alongside somebody else and there's a cash out refinance, I would like to get paid back my money first and be able to remain in the deal at my same ownership, just like everybody else, and just like I would if I was buying the deal on my own. So the reason that we do it that way is because we're not trying to, like, sure, we could make more money if we said, all right, investor, when we cash out refinance, I'll pay you back, and then you're out of the deal and now I own it by myself. But I wouldn't want that to happen to me, and I want to take care of them as much as I can, because I'm not trying to make as much as I can on this one deal. I'm trying to go buy, 50,000 more apartment units with them, or 50,000 more RV parks with them. And when I take care of the investors and do to them what, I would want somebody to do to me if I was an investor with them, then, I'm thinking of them first. And, I mean, they're putting their money up at risk by investing in this deal. And I want to really take care of them. And I want to, under promise and over deliver with them. And I want to give them the best experience that I possibly can. And so that's the reason that we do it, because they're owners in the deal. Yes. It's not a loan, but we do have the option, if we wanted to set up our deals where that doesn't happen. People do that, but we make the choice to always think of the investor first and think of ourselves in their position and what we would want to happen if we were in their shoes. And that's what I would want to happen. If I was an investor in a deal and there's a cash out refinance, I would want to get paid back my money, remain in the deal at my same ownership. Does that make sense, Rick? Can you unmute him again? You gotta unmute yourself, Rick. Rick, you gotta unmute yourself.
Yes, that is what I thought this afternoon. I was thinking about it, but I just wanted to make sure. They're not lenders, they're owners. Okay,
Yes, sir.
got it. Thank you.
But again, you don't have to do it that way if you don't want to. It's just how we choose to.
Okay.
All right, what's the next one? Wouldn't it come out of general partner's percentage as per contract if in contract? I'm not exactly sure what you mean, but yeah, whatever is written in the agreement with you and your investors is what will happen there. Someone says, I agree with scroll up. I agree with Rick. LP get their money back, but the KPs are still on the hook on the new loan. So why isn't the ownership increased? I mean, what's the difference? What's the difference between being on the hook for the new loan versus being on the hook for the first loan? If the investors put up all their capital, it's my opinion that they should get paid back first. Again, it's what I would want to happen if I was the investor in somebody else's deal. Sure, you can increase the percentage, you can increase, your pay, you can do all those things. But we like to keep it very straight and simple and say, investor, thank you for betting on us. Thank you for betting on this property. Thank you for being our partner. And when we refinance this deal and get you paid back, you can stay in the deal for your same percentage. You're going to get an infinite return and receive the same percentage of cash flow with all your money back. Alma says you're on the hook for large dollar amount, so there's more risk. Maybe, maybe not though, right? These are good deals. These are not bad deals. A lot of times, these are probably non-recourse loans where I'm not even personally liable. So potentially, but I would just, y'all run your real estate business however you want to. I would encourage you to not be greedy with it. And if you want to do this a long time and you want to, do a lot of deals with a lot of investors, I would encourage you to, not think of yourself first, but think of your investors first who gave you, $2 to $5 million, whatever you're raising. And what would you want to happen if you were in their shoes for putting up all their money? And so that's what we do. And if I was those investors, that's what I would want to happen. All right. Great questions. And, again, that's just how we think about it. That's how we do it at TR3 Capital is, we put ourselves in the investor's shoes and we keep it straight and simple. We don't make more money if the deal makes more money, right? Like it's not like if we achieve a higher return, we get more of a percentage or anything, or investors make less. Straight split. We do get paid acquisition fee, asset management fee, and disposition fee. But other than that, if the property makes more money, everybody makes more money. Everybody shares in the success. It's not, thinking of ourselves first. It's ultimately thinking of the investors first. Anybody have any other questions that you want to come up and I bring you up here? Who here put TR3 in the chat if you are going to put TR3 in the chat. Put TR3 in the chat if you are going to leave here and implement what we have learned today. And put TR3 in the chat if you received a lot of value here today. Kat, put me back here on my slides. I guess you're still there. Put TR3 in the chat if you have more knowledge and more certainty than you did when you joined this live training today. Again, my goal is to help you guys. My goal is to do deals with you guys. I love seeing the TR3 in the chat. I love that everybody here has stayed the whole time and participated. Our goal with this is to find more partners, to find more investors. We want to do deals with you. If you invest in our deals, I promise I'm going to take care of you the same way that I take care of myself. And I would if I was in your shoes. If we do a cash out refinance, you're getting paid back first. But I hope you learned everything that you wanted to today. Again, if you want to take it a step further, if you want to come join that boot camp, if you want access to the courses, just go to treuniversity.com/now for the Get Started Fast Now offer. You can cancel at any time, no commitment. I hope to see a lot of you at the boot camp. We do these things every single month. We go live every single week. We have YouTube videos. We're always on social media. We're putting deals together. We're going to be finding more investors for the new RV park that we just put under contract. Kat, can you also put Marshall, you can cancel at any time. It's $97 monthly, but you can cancel it at any time. Can you put in the chat tr3capital.com/fund3? See, you thought you had it, but you weren't listening to me. tr3capital.com/fund3. Fund number 3. If you're interested in looking at deals and seeing, what it's like to invest in deals, and you want to invest in the deals that we're putting together, go to this link we're putting in the chat. It's tr3capital.com/tr fund3, sorry, tr3capital.com/fund number 3. Why is it not the full link there? Do it again so it's full link. But we're putting together, we just closed on the RV resort. We're putting together this new RV park that we just got under contract the other day. It's bigger, 142 slots. There's big opportunity with it. And when we own both of these parks in this one small area of Terrell, Texas, in Kaufman County, which is the fastest growing county in Texas, second fastest growing in the nation, 20 minutes from Dallas, Texas, we're going to control the market. In these RV parks, they print money. So if you're interested in checking that out or interested in investing with us, just go to tr3capital.com/fund3 and just reach out to us. Like I said, the best way to do more stuff with us is to build a relationship with us, show up to these things, show up to the boot camp and spend 4 full days with me. Come to our investor calls. You can sign up for that in the chat as well. And if you're here in the system and everything, we send out emails so that you can attend our monthly TR3 Capital investor calls. But we appreciate your time tonight. We're looking forward to doing more with you. And just remember, keep this big D right here. Your desire, your dedication, keep after it and reach out if you ever need anything. We're here and we want to see you succeed. Thank you all again.